All right, mic's looking good. Everything looks good here. All right, thank you guys so much for tuning into today's live stream. Today is May 29th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here for you guys. So we have unemployment claims increased from 226,000 to 240,000. So this is an increase in unemployment, which isn't good. Let's see. Yeah. So I mean, relatively looking at it from here, from this standpoint, it's not as great compared to what happened in 2020, but it is an increase in unemployment. Let's see here. We have some FOMC meetings here today, pending home sales month to month, and then we have preliminary GDP quarter over quarter. While this is a quarter over quarter data, it's reported in a annualized format. The previous listed in actual from the advanced release, therefore the history data will appear unconnected. There are three versions of GDP released a month apart. Advanced, preliminary, and final. Advanced is the earliest and thus tends to have the most impact. It's the broadest measure of economic activity. So this is I guess like the middle man, but it does look like GDP did. I mean, it's still contracted, right? It's at a negative 0.2%, but previously it was at a negative 3% in advanced GDP. So you could say that it's getting better, but it's still worse, or not. It's getting better, but it's still in the negative side, which is not good. And with that, I mean, that's pretty much all that we have for today, at least on the economic calendar wise. I'm going to go take a look at the Wall Street Journal just to see if there's anything that... Okay, so this right here, U.S. jobless claims rose last week. Yep. Within a week, 204,000 people newly filed for unemployment benefits compared with the 226,000 week prior. Many more people newly filed for unemployment claims last week, according to the Department of Labor. Let's see. Yeah, like I said, it did increase from the week prior, or compared to the week prior. The number of continuous claims, a gauge of the size of the unemployment population, rose to 1.92 million in the week through May 17th, the largest since 2021. A week earlier, 1.89 people had filed continuing claims. The continuing claims data lagged the data on new filings by a week. So new tariffs put into place in March and April raised concerns that higher input costs could lead to companies having a constricting profits. The profit margins are going to decrease as they might have to spend more money in COGS. And, with that, I mean, it could lead to layoffs, which this could be showing, which unemployment could be showing, but a weakening economic sentiment could hobble their could hobble the labor market, but so far there's been little sign of substantial increase in layoffs. Yeah, I mean, it's not that much, from 226 to 240. A federal court's ruling Wednesday against much of the White House's tariff programs could derail parts of the President Trump's data agenda while shading the future of the policies with greater uncertainty. There's Jerome Powell. Here it says, the name of this article is "The Fed Forecasts Stagflation." And stagflation is it's like a combination of both inflation and like quote unquote recessionary characteristics. In stagflation, prices are high, and people are not the economy is not growing as much. I think ChatGPT could probably provide you a better definition, but let's see. See, stagflation is rare but serious economic condition where three things happen at the same time: high inflation, rising prices; high unemployment, weak job market; and slow or negative economic growth. That's basically what stagflation is. It's a combination of both inflation and just stagnation, which is like no growth. But to go into the actual charts here for the morning. So we did complete a 10-day objective yesterday, and the daily objective here was also complete as well. Was also completed here. This is the daily candle from yesterday. So it was an up close candle, right? And I mean, the easiest assumption to make here, based off of this daily candle, is that we're most likely going to take out the daily high. So this is the daily high. And during, I believe it was maybe during the Asian session, we did take out the daily high. And this is due to this, I think this rapid increase here was due to NVIDIA earnings, where NVIDIA earnings, I believe, was positive. Yeah, so this is the earnings from NVIDIA. So the estimate earnings was 0.737 and reported was 0.81. So we did beat the estimation. And then the revenue was also more than the estimate. So I mean, this was positive, and then NVIDIA over but during closed trading we did expand higher. I'm not necessarily too sure how we even expand while the markets are closed, but nevertheless we did get that increase. Let's see here, we moved about 10 points here on the video, and so I mean, that's kind of the reason why I believe that we did have that increase in prices, that surge. I kind of want to check something out here before we do start anything. So this is the 4-hour candle closure, and yeah, like I said, we did complete the daily objective and the 10-day objective already. So this was the previous 10-day candle, and based on the way that we closed here on this 10-day candle, it was to be assumed, it was my bias that we were most likely that we were most likely going to take out the 10-day high. And after we take out the 10-day high, you can't really rely on this time frame anymore. So I'm just going to, possibly use the intraday time frames coming into today. So like I said, I can't use the daily time frame, I can't use the 10-day time frame, I can't use the weekly time frame. So coming into the morning session today, I'm gonna use the 4-hour candle. And this 4-hour candle closes in about 17 minutes. Same thing here on this 8-hour candle. Those two time frames will close, like I said, in 17 minutes, and will provide me a bias, right? Every single candle has an objective. So depending on how we close here on the 4-hour candle and the 8-hour candle, it will give me a reason on where, it will give me a reason where prices wants to go. So I'll just wait until then. But for right now, I do want to see if we have, so what this box is essentially a dealing range. So from this swing high to this swing low, where those red lines are, there's a dealing range, right? And within a dealing range, there's always going to be discount and premium. And because we're trading lower here, it's almost like we're seeking discount levels, right? So I want to see prices trade into this green box, which we did. We did trade into the discount of this specific dealing range. And if you want to take a look at another dealing range, so there's a swing low there, but there's also another swing low here. So that's another dealing range, right, that we can use. So from that swing low right here to this swing high up here, there's a dealing range. And it looks like we did just trade into the discount of that specific dealing range. So notice how prices traded into that green box. And that's basically us trading its discount there. And then there's like one major, or actually a couple more dealing ranges left. But let's see, another one would be like this one right here. So there is another significant swing low right here. And it, looks like we're most likely going to retrace back into the discount of that dealing range. So you want to watch out for that. But it's essentially, that's another reason why, it's a higher time frame reason why prices should be continuing lower, or could be continuing lower. And it's to retrace back into this specific dealing range here. And yeah, I mean, it looks like if you guys take a look at this, we are moving lower. One thing I do want to mention here as well is on ES, I believe. Oh, okay. So ES, we did catch up. We did take out previous week's high here on ES yesterday. So I want to see if there's any SMTs here between ES and NQ. And it doesn't look like we have Okay, so there is a SMT here that actually, there's that. Okay, so there's actually an SMT here. But on yes, we did take out previous week's high. I thought we didn't, but it turns out we did. Alright, it's cool. But yeah, I'm still, like I said, I'm still looking to see if we, for the intraday time frames at least, I am watching prices and seeing if we could trade into the discount of the dealing range. Yeah, bye man. Alright, so if prices can get into that green box, that would mean that we have completed the objective. But let's just say that the 4-hour candle closes like right here, right? And we didn't trade back into the discount of this dealing range. This would incentivize me to, look for a bearish setup into the discount of this dealing range. That would give me like a reason for why prices should also continue to go lower. Not only does the 4-hour candle and the 8-hour candle suggest lower prices, but we should be continuing lower to trade into the discount of the dealing range. Think of it in terms of a buyer and a seller in a market, right? Buyers, they're always going to be wanting to buy in discount. It just makes sense for them to, right? And I mean, who wants to buy when prices are really high? And sellers, vice versa. Sellers, they're going to want to be selling in premium. So in this case, if there are buyers here in the market, they're most likely going to want to trade, or they want to be buyers in that green box, right? They don't want to be buyers in premium. They want to be buyers in that green box. So if we can get a short into the discount range, which is the minimum, I guess the minimum on where prices could go if we're seeking lower prices, that's going to be my target here, right? And if you guys take a look here, it looks like we did nip into the discount of that dealing range. So look, we barely traded into the discount of that dealing range. As you guys can see, discount was 0.50, the low was 0.25. So we barely traded into that, and now we really got that stab, as you guys may have saw just now. But yeah, so it looks like we did trade into the discount of that dealing range. Like I said, there's two more lows here that I would watch for. Is that one being the red line, and another being previous week's low. So you can create dealing ranges with those two swing lows. But for me, for right now, I'm just going to wait and see until we actually close here on the 4-hour candle and the 8-hour candle. Just going to be a little bit patient. There's no need for me to really force a trade now, right? There's the objectives here on the higher time frames has already been completed. Like I said, we took out the daily high already, which was my daily bias, and we also did take out previous week's high, which was my 10-day bias, and I was seeking higher prices yesterday, and I did end up taking a trade yesterday. I just want to show you guys here. So yesterday, to recap what the trade was from yesterday, it was based off of a 10-day candle, right? So this 10-day candle, notice the way that we closed, right? We closed on this 10-day candle suggesting that we're most likely going to take out that 10-day high. And I just want you to just ask yourself this, right? this 10-day candle, right? It's a bullish up close candle. The very next candle that you can, like, the bare minimum that we should do on the very next candle is to take out that 10-day high. After we take out that 10-day high, I don't care what we do, right? But I just know for, like, bare minimum wise is that we should take out that 10-day high. So if I'm anticipating for the next 10-day candle to be an up close candle to target that 10-day high, then I want to be a buyer below the 10-day open. So let's take a look at the lower time frames that will align me with the 10-day order flow, 10-day bullish order flow, right? So keep in mind, the higher time frame objective for this trade is based off of the 10-day candle, which is bullish prices, right? I want to see higher prices. And so to align myself with the 10-day order flow, I go onto the daily time frame. And notice this, all of these candles here to the right, it says 1 day. So all of these candles are daily candles. It's a indicator, but all of these candles to the left are 4-hour candles. It's just an indicator, but what I do want to draw your attention towards is that the daily candle here, right? On Tuesday, we closed bullish. So the very next daily candle, right, because it's a bullish closure, the easiest assumption that you can make is that we're most likely going to take out that daily swing high, this daily high right here. So now that I found a model that aligns with the 10-day order flow, right? I have to find an entry pattern. So just to recap, higher time frame objective was the 10-day high. The model, how I'm aligning myself with the higher time frame objective, is based off of the daily time frame. And the daily time frame suggests to me that we're most likely going to take out that daily swing high. And so this means that the way that I interpret this is that we should take out the daily high, right? Not only should we take out the daily high, but we should expand towards the 10-day high after we complete the model's objective. And then we should expand higher towards the higher time frame objective. But yeah, that's the higher time frame objective. That's the model. The only thing I need left is a fair value gap. So on the lower time frames relative to the daily, I noticed that there is a 8-hour fair value gap and a couple fair value gaps left that also supports the same idea, right? And so I use this 8-hour fair value gap. I noticed that this fair value gap right here is it supports higher prices. It's a BISI, buy side imbalance, sell side inefficiency. So if we trade into this fair value gap, we should respect it, right? You're probably wondering, like, okay, there's a lot of fair value gaps, right? And how do I know which fair value gaps will be respected? Well, if you know what the higher time frame objective and what the order flow is, then understanding which fair value gap should be respected is a lot easier. And I mean, it's not going to be guaranteed that that fair value gap will be respected. You have a higher probability that it will be respected if you know what the model and if you know what the higher time frame objective is, right? What the higher time frame order flow is. And my higher time frame order flow, like I said, was at 10-day high and previous day high, which were my two objectives of this trade. So once prices trades back into this 8-hour fair value gap, I take my entry. I have my stop loss at the fair value gap low. I didn't think that we were going to completely rebalance this inefficiency. So that's why I kind of had my stop loss there. And yeah, as you guys can see, prices trades into the 8-hour fair value gap, and overnight, I think like during the Asian session, we expanded towards previous day high, and then we continue to expand towards previous week's high, which was the 10-day high. So that's essentially the entire trade there, right? Like I said, I wanted to see prices expand towards previous day high after rebalancing the 8-hour fair value gap. And not only should we stop at previous day high, but we should continue higher towards the 10-day high based off of this 10-day closure. So everything comes together at the end, right? Going from the 10-day time frame to the daily, all the way to the 8-hour, and then it works like it's like gears. Everything's working in tandem with one another, right? Every single time frame that I just showed you guys supported this idea of higher prices. And I think there are a couple things that I do want to just keep in, leave with, is that because I'm taking this on the daily time frame, my model is on the daily time frame, I should, or not I, but prices should complete the objective within a day. I'm only going to allow one day's worth of trading for us to complete the daily objective, right? Because we created this daily candle within a day, so we should complete that daily objective within a day. And if it was, let's just say that I took the model on the 15-minute time frame, then that means I would only allow the trade to run for 15 minutes because the model was created on the 15-minute time frame. And I think, here, the first thing about this trade is that we lacked SMTs with ES at the highs. This is really crucial because we didn't have any SMTs at previous day high or 10-day high, right? We didn't have any significant SMTs. So this suggested to me that we are most likely going to have a continuation in the direction already, right? In which is bullish prices. So because there's a lack of SMT, there's no SMT, which means we should continue higher in this case. And we are about to close here very, very soon. So I do want to take a look at this image. But with the way that we close here on this so just what? Who are you talking to, Keith? So with the way that we close here on this 4-hour candle and this 8-hour candle, easiest assumption is that we're going to take out that 4-hour low / 8-hour low. That's the easiest assumption for me to make, right? So for me, for the next 4 hours or so, I would be targeting this low right here. I'm going to be bearish, meaning I'm going to be looking for only bearish setups until we take out that 4-hour / 8-hour low. And to give you guys a little bit more insight, this hourly time frame, this hourly candle, notice how the hourly candle's low is the same low as the 4-hour / 8-hour low. So that means we should complete the 4-hour / 8-hour objective within the next hour. This idea is called scope. I don't think ICT has ever introduced that concept. It's just a concept that I have created. I've just recognized it with experience. But yeah, because because the hourly low is the same low as the 4-hour low and the 8-hour low, for me, I'm anticipating for us to complete this objective to take out this low here, this green line, within the next hour. And let's take a look at the 15-minute time frame here. 15-minute time frame, rather indecisive. I mean, but we could end up getting that expansion lower. Who knows? But yeah, like I said, I'm gonna be bearish here, but I don't have a model. My higher time frame reason, the higher time frame draw of liquidity, could be based off of this hourly candle here, which is telling me that we are most likely going to seek lower prices. But look at the 15-minute time frame. I can't frame a model based off of this 15-minute candle. It's not really, like, if I were to pick a side here based off of this 15-minute candle, I couldn't, right? It's the way that we closed is not suggestive of lower prices. Yeah, like I said, I have an idea of what the higher time frame objective is. I just don't have a model to align myself with the higher time frame order flow. So like in this trade here that I was recapping with you guys, I had a higher time frame objective. I knew what the higher time frame order flow was, and I also had a model that aligns with the higher time frame order flow. So there wasn't any complications of me finding kind of like an entry pattern or an entry point, right? But coming into the morning here for right now, I don't have a model. Who knows? We could take out this hourly low without providing me a model, which is completely fine, right? If we do that, I would just sit on my hands for, God knows how long, for another hour, 4 hours, another day. But I just have to be patient, right? My model will show up. The strategy will show up. I just have to trust in the strategy itself and be patient and really show discipline, right? Like I've showed you guys here, these like models, the way that we present prices, every single candle has an objective. So knowing that, I'm pretty confident that if I miss out on this, I guess trade here, if I miss out on this move lower, there will be a lot more opportunities for me to be a part of the market. It's just, for right now, it looks like we aren't given that opportunity, which is completely fine. But once a opportunity does present, then I'll be ready to be a part of it, right? But yeah, I basically recapped the trade already with you guys. I had a higher time. So some key things to take from this is that I had 3 components to this trade, which was the higher time frame objective, the model, entry pattern. Those 3 things will be present in every single one of my trades from this point on, right? Like, the reasons why I haven't been really taking as many trades is because first, there hasn't been a lot of opportunities, and second, these components are I wouldn't say a lot stricter, but it really weeds out the bad from the good opportunities, right? And that's kind of where I'm at right now with my trading. That's my strategy. Very, very, I would say it's a simple approach. I'm only looking for 3 things: higher time frame objective, a model, fair value gap. But if you guys have been with me for a while now, you guys might have seen a lot of these reviews where these trades are they're happening a lot, right? And the reason why they happen so often is because of time frames and each candle having its own objective. If every single candle has its own objective, the opportunities that are present, that are going to be present, are vast. And to narrow the good opportunities from the bad opportunities, like I said, it's through those three components that I look for. Your view side, your perspective might not be the same, but that's just how I view prices. And I guess to kind of really sum it up here, okay, so we did just take out that 4-hour low, which, like I said, was the draw of liquidity for me here. And watch for if we can rebalance, or not, I wouldn't say rebalance is the right term, but retrace back into this green box, which is the discount of a dealing range. So watch for that. Watch for if we can retrace back into the discount of this dealing range here. And to really just end today's stream, I do want to go over some of the pros and cons. I know I've already gone over the pros and cons yesterday, the day before. It's just to create a sense of consistency and discipline, right? And funny enough, the very first pro is taking consistent trades, right? That's like my main core value when approaching this whole endeavor, trading, is to be consistent. And the way that I'm consistent, right, is that I'm always going to be requiring a higher time frame objective. I need to know what the macro reason on why prices should be continuing lower or should be continuing higher. So that's the first thing, higher time frame objective. Second, the model, how I'm actually going to align myself with the higher time frame objective. And third, entry pattern. Those three things make up my trading strategy, and they allow me to be a consistent trader. So that's the first thing. Second, knowing when to pivot onto different time frames, right? So I have here on this example, if the higher time frames, such as possibly the 4-hour, daily, weekly objective has been completed, you could zoom in into lower time frames because of the fact that every single time frame has an objective. But you have to understand that 1-hour objective does not mean daily objective. What is that? Like, how can you interpret that? Is that this 1 minute structure, right? Based on this 1 minute fair value gap, let's just say that you're taking a short. I wouldn't be targeting yearly low with this 1 minute fair value gap. It makes no sense for me to be doing so, to treat it as a fair value gap that supports the entire leg down into it makes no sense for me to treat that 1 minute fair value gap and target something like the yearly low, which look at the amount of movement that we have to make with that 1 minute fair value gap. 5,000 points. It's not proportionate. So you have to keep in mind that every single candle has its own objective, right? But that objective is not directly proportionate to a different time frame's objective. How can I? It's like looking. I feel like there's a better representation of what I'm trying to convey here. it's like a coin. Let's think of it like coins, right? A dime. Let's think of it as a penny and a quarter. Even though they have the same functions, right? Even though they have the same objective, which is to buy things, a penny can only get you so far. It can only get you 1 cent of a product or a service. A quarter, however, offers the same objective, which is to buy things and services, but it has larger capabilities, if you think it like that, right? 25 cents compared to 1 cent. It's still cents. It still has the objective of getting you something. The objective, a sole reason of money is to get you things, right? To buy, is to offer, is to be able to use to exchange for trades for products and services, right? But a 1 cent does not equal 25 cents, right? They offer two complete things, but they have the same objective. Enough rambling about that. Hopefully that example was enough to explain to you guys that 1 minute structure does not equal a weekly structure. Okay. And third, you do want to pay attention and close attention to SMT while you are trading. A lack of SMT, like I said, is a confluence for a continuation in that specific direction. And if there is SMT, then that could equal a possible reversal, right? For me, I've always seen swing highs and swing lows, especially significant swing highs and swing lows, to be accompanied with SMT. There's always going to be SMT at specific swing highs and swing lows. But if you notice that there's a lack of SMT, meaning there's no SMT, then consider, or not, I wouldn't say consider, but it's an extra confluence. It gives you more confidence in your bias for a specific direction, right? And the fourth, aligning lower time frame models with higher time frame order flow. What I mean by this is that, so for example, for the trade that I went over with you guys today, right? I went from the 10-day time frame onto the daily time frame onto the 8-hour time frame. Notice how I did not go from the 10-day time frame all the way down to the 1 minute time frame, right? I don't go straight from 10-day to 1 minute. I'm skipping a bunch of steps whenever I do it like that, right? I'm skipping a lot of information. I'm missing out on the 1 hour, 4 hour, daily time frames. I'm missing out on those information if I go from the 10-day time frame all the way to the 1 minute time frame. And so to kind of put this into a better understanding, it's almost as if, so imagine the 10-day time frame as page 1, right? I understand very basic. I know where prices wants to go, but I need to know a little bit more information. So I go from page 1 to page 2. If I need to find a little bit more information, page 1, page 2, page 3, page 4, page 5, etc. But if I go from the 10-day time frame all the way down to the 1 minute time frame, like straight like that, I literally disregard what's happening on the hourly time frame. I disregard what's happening on the 4-hour time frame. If I do that, it's almost as if I'm reading page 1 and straight to page 50. I miss out on page 2 to page 49's information. I have no idea if there's been new characters that has been introduced. I miss out on almost 48 pages worth of information, right? I have no idea what's happening in between, and the probabilities of my idea playing out, if I approach it like that, goes down to zero, or goes down to nearly zero. You can still coin flip it, but would you rather have a higher percentage of an idea playing out because you knew the facts and you knew the information, or would you rather have a 5% chance of it playing out, and because you wanted to be hasteful and you just didn't, and you wanted to disregard information? That's just kind of what I mean by this fourth point here. So understanding different time frames and aligning lower time frame models with higher time frame order flow. Fifth, utilizing time stops. It's a little bit different. Or I want to say different, but it's kind of difficult for me to explain this concept without actually being in a trade. But just know that your model could give you an idea of how long a trade should pan out for, right? If your model, like I said, is on the 15-minute time frame, then you should only allow 15 minutes to pass before considering to close out a trade or moving the stops to break even. And some things I could work on, just being a little bit more attentive, with where, prices is at. And I could do this by checking, maybe checking my phone, checking the charts every 15 minutes. I don't have to be present constantly, right? As you guys may see, I don't check the charts. Like, I'm not constantly staring at these charts here, but I am in fact checking them, every 15 minutes or so, right? Because every single 15 minutes presents a new objective. I don't like zooming onto like the 5-minute or like the 10-minute. The 15-minute and above is good for me, which is why I use it as a time for intervals. And to really just summarize things up, being consistent, requiring those 3 components, right? For me. Second, learning how to pivot. If a time frame objectives has been completed, then pivot, go on to lower time frame. Understand every single time frame has an objective. Third, you want to pay close attention to SMT during trades. If there's any SMT that is present, then you want to consider moving stops to break even. It just prevents you from taking any unnecessary losses, right? And that's gonna wrap it up for me for today. I do want to leave you guys with a little bit more insight though. So we did trade back into the discount of this dealing range here, right? And there's one more dealing range that I'm watching for today, which is this swing low here at previous week's low. So I guess that's an objective for, maybe the 6-hour candle. But if we continue to show bearish closures, then the discount of this dealing range here could be a higher time frame objective. So that's something that I do want to leave with you guys. And don't forget to utilize, the 6-hour candle, 8-hour candle. All of these candles, all of these time frames has an objective of its own, right? So this 6-hour candle will close in about an hour and 40 minutes. After we close on that candle, there will be a new objective, which could be the 6-hour low or the 6-hour high. Who knows? I don't know what we're going to do within the next 1 hour and 40 minutes. But once we close, there will be a new objective. So utilize different time frames, right? Not just the 4-hour and the 8-hour time frame, but utilize the 6-hour, utilize the 1-hour time frame. Who knows? Maybe even use the 30-minute and the 15-minute time frame because time frame is fractal. So use that to your advantage. And yeah, until next time.